Okay, guys, so welcome to this video. Uh, this video is specifically done only and only for your MCQs. So, this is the first time that costing is going to say MCQs in the paper, and there's a huge sea of data available. And a lot of you are really confused as to what to say, what to not. So, what I've done over here is I have put across all a summary of all the MCQs that are behind your module. Okay, and I'll be explaining each of those MCQs so you can quickly understand why that is a particular answer. Okay, so the idea behind that is just to have a very quick fast revision of the MCQs from the module. Now, why am I choosing the MCQs out of the module? Because it's the first time that they're going to put across all of this. So I am very hopeful that institute will be asking at least 50-60% of the MCQs from their own material, since it is the first attempt. They may progress later, but right now in this attempt I see a lot of questions coming from their own material. So which is why it is a good habit to practice their own material and get into the exam. So without further ado, let's do this. This is your first topic, Introduction to Cost and Management Accounting. I'm at the module, and this is your MCQ number 1. It says, this is anything for which a separate measurement is required. Now, when they say a separate measurement, now it doesn't really light a bulb, right? So in such a situation, what you should be doing is start looking at the options. I'm sure you do that and figure out what is the best option available. So one of it is cost unit. So cost unit is any unit for which in which you describe the cost. It could be kg, liter, meter, whatever. Okay. Now, is it a separate measurement? No, it is not a separate measurement. It is a unit of measurement. So there's a difference. Cost object is anything for which you can find the cost. You can find the cost for anything. This is what is a separate measurement. That the cost unit is a separate measurement. It is so the cost object is a special measurement, different one, because it can be calculated the cost for. You can calculate the cost for that. Cost driver is the reason why a cost changes. So that is again not a separate measurement. And cost center is basically a department or a person uh, whose job is to spend money. Let's just put it like that. Whose job is to spend money. So that is a cost center. That is again not a separate measurement. A separate measurement is cost object. Okay. Now, the second one, which of the following is true about cost control? Now, I'm sure you have read the notes, but I'll quickly just show you the cost control and cost reduction. That's a very good calculation theory to have. So, what is cost control? It is where you are making sure that whatever you had planned, you keep that under check. Okay, you will do that by reducing the controlling the cost to a certain extent. You derive those numbers based on the past and the present data. It is not in any way corrective in nature. It is preventive in nature. It will make sure that you prevent the cost from overshooting, and the moment you reach your target, your job is done. Whereas you have something called as cost reduction. Now, cost reduction aims at permanent change into the cost of the product and without really hampering the quality of the product. Okay. The focus of cost reduction is present and future. So, cost control looks at the past and tells you how much you should be doing in the present. Cost reduction looks at the present and tells you what you should be doing in the future. So there's a shift in the dynamics over here. This one is corrective in nature. Why? Because not really stopping that cost to go beyond a particular range. You are actually redesigning the cost itself. Okay, and it is a continuous process. So as cost control says that once my target is done, I'm done. Cost reduction always believes there's scope for improvement, so it keeps changing and it keeps improvising on the cost. And lastly, cost reduction is proactive. Before something happens, you are trying to put across new, better cost with improvising the quality, or at least maintaining the quality and still reducing the cost. Okay. Now, with that premise, come to it. Uh, what is true about cost control? Huh? Cost control. Is it a corrective function? Is it a corrective function? No. It is only a preventive function. It challenges the set standards. No, it is what you have to achieve. The standard is made, you want to achieve that. That's all. It ends when the targets are achieved. Yes, it ends when the targets are achieved. Uh, the cost reduction, on the other hand, is continuous in nature. It is concerned with future. No, it is concerned with the past and the present. Cost reduction is concerned with present and the future. Cost unit used in the power sector. We have done a question on this. I'm sure you know this. It's kilowatt hours. Process costing method is suitable for. So process costing, we have done the theory on it. We've done the chapter on it. You know that process costing can be useful where there are multiple processes in a manufacturing cycle, and they're broken down into smaller pieces, and then you find the cost of each and every piece. Okay, so that is exactly what is process costing. Can you use it for transport sector? No, transport will work on service. Chemical industries, yes, they'll have a lot of processes to make the process. So chemical industry. But just out of curiosity, and I wanted to message me this. What do you think would be dam construction? It's a one-time project. You make it once and you are done. It is a construction project. Uh, and what do you think about furniture making? This I think we've discussed in class as well. Furniture making. Uh, Message me on Instagram about this. What do you think about that? Yeah. Which are the after exams? Just fun activities. Which of the following is not true about cost control and cost reduction? So we have already seen cost control and reduction. Let's see. Cost control seeks to attain the lowest possible cost under best conditions. It is false. It does not seek the lowest possible cost. It seeks the cost which we have planned for. Okay. Cost reduction tries to achieve the lowest possible cost with the best conditions. Okay. It is not the other way around. So we've got our answer, but let's discuss the other alternatives. What they've given. Cost control emphasizes on past and present. We just saw that. Cost reduction is a corrective feature. Yes. And it operates even when an efficient cost control system exists. So because it's a continuous activity, always go on. Cost reduction is an ongoing activity. You will keep trying to reduce costs even when you have a very efficient system in place. Your costs are good, your costs are efficient, you will still find ways to reduce. Okay. Cost control ends when the targets are received, which is again true. Cost control will end. The cost reduction is an ongoing activity. So we had our first answer. Then the advantage of using IT in cost accounting does not include. Now this is a vague kind of a MCQ. So if I was a student, how would I approach this? So it is an advantage of using IT. Okay. But they are saying it does not include. So it does not include what? Integration of various functions. I'm sure you would understand that when it comes to IT, the first primary thing that comes to mind is integration. So this could not be the one. Then you have reduction in multiplicity of documents. I mean, the moment you go IT, you're going digital, and the number of unit documentation would anyways reduce. Customized reports can be prepared, yeah, because system. Think of Excel, one data, multiple reports. Yeah. So the only thing that remains is this. Stock needs to be reconciled with goods received. Now you'll have to understand this. IT is a system. You put in data into the system, you generate information. But there are physically goods that have come into your factory with a goods received note. Now, what's a goods received note? It mentions how many kgs and what items have you got for, and the delivery that you have. That delivery has received what all items. Okay, so they give you a GRN called of a thing. So the goods received note where you record all of that. Now you are going to feed the data into the system that you got 10 parcels. Okay. But unless and until you haven't physically seen those 10 parcels, whatever you put in your system is going to be flawed, right? So you can't put in a flaw. So you reconcile, you make sure that the physical stock is as much as the goods received note, and then that goods received note can be put into the system saying that okay, on this date at this time, so and so person received 10 parcels of goods. So which is why IT cannot really help you do that. I understand. Now, this is a stupid one. I'm sure anybody in their sleep would answer this to me. A taxi provider charges minimum 80 and thereafter 12 per kilometer distance per kilometer of distance traveled. The behavior of conveyance cost is definitely semi-variable, part fixed, part variable. So that's semi-variable. Then you have A Limited has three production departments and each department has two machines. Which of the following cannot be treated as a cost center for cost allocation? Now, for this, I want you to come to what exactly is a cost center. I think it is right here. Now, so what is a cost center? The manager of a cost center is only and only responsible for controlling costs. Okay. So you have four types of centers: cost center, revenue center, profit center, and investment center. So cost center's job is to control costs. Revenue center's job is to maximize revenue. Profit center, the manager of a profit center will make sure both of them, the cost manager and the profit managers, he manages both of them. And then comes in the investment center. The manager of an investment center will make sure of the capital investment that the organization is going to make. There's a cost, revenue, profit, and investment center. Now, you have, they are saying which cannot be treated as a cost center. Machines under production department, can you treat them as a cost center? I mean, yeah, why not? The machine is basically spending money, so it is a cost center. Production department, yeah, they can also be considered a cost center. Both production department and machines, again, yes, the production departments may be considered a separate cost center, and so does the machine. And then they have said A Limited. A Limited is not really a cost center. Why? Because it will generate profit also. It will generate revenue and of course profit, and it would be making its own decision. So the manager of A Limited will not be considered as a cost center. So this is not a cost center. Okay. Which of the following is an example of functional classification of costs? Now, you have classifications of costs, variety of classifications. One of the classification is the functional classification. As the name suggests, the functional classification defines the cost as per the functions an organization performs. What are functions that an organization performs? Sales is a function, production is a function, HR is a function, marketing is a function, finance is a function, all of these. Now, let's see. Is direct material cost a function? No. Why? Because it is only showing you the nature, whether it is direct or indirect. Okay, it is not a function. Okay, so which is why no. Fixed cost, is that a function? No, it is a cost behavior. A cost behavior means how a cost behaves to the level of activity. Administration overheads. Admin overheads will be a functional classification. Why? Because it is telling you exactly which function they are spending the money on, which is why functional classification. Lastly, they've said ticket counter in a railway station is an example of cost center, revenue center, profit center, and investment center. Now, what would the ticket counter be doing? It'll be controlling the money that comes in, selling tickets. Since they're selling tickets, that will become a revenue center because that is where the money will come from. Are we understanding? So, which is why that is a revenue center. Is that clear? So, that's all the MCQs over here. I think this is a good wrap. I will see you in the next topic. The next topic that we have is materials costing. Again, I think we have around 10 MCQs for it. Good MCQs, simple ones. One or two may require some explanation. So let's get on to it. So the first one, direct material can be classified as fixed cost, variable cost, semi-variable cost, and prime cost. So it can't be prime cost for sure because prime cost is material, direct material consumed plus direct labor plus direct expense. So that's how. Now, if you remember the budget chapter, we always used to do this. If we have cost at only one level, we will identify um, the cost as fixed variable or semi variable based on name of it. And we always said that all direct costs are variable. So direct material will be under the category of variable cost. Okay. In most of the industries, the most important element of cost. This is, I find this MCQ a little subjective because they are saying most important elements. So elements are material, labor, and expense. They are asking us which element is the most important. Now, see, if you are a service industry, the important element has to be labor. If you are a manufacturing industry, then of course your most important element has to be material. But you can't really say that in most of the industries the most important element is material. I think that's a little biased to say, but that is what is the question, and it fits well. So keep this in mind. Okay. Then the third one, it says, which of the following is considered to be normal loss of material? Loss due to accident. Now, is accident normal in nature? No. Pilferage. Pilferage is basically theft, something similar to theft. Is theft normal? No. Then loss due to breaking the bulk. Okay. Breakages could be normal. Some part of it would be normal, I guess. And then they say loss due to careless handling of material. Now, if it is careless, it means you could have avoided it. Anything that you could have avoided was the abnormal loss. Abnormal losses can be avoided. Normal loss cannot be. So this also is not the thing. So we'll go with loss due to breaking the bulk. So some breakages could be normal in nature. So that's what they're trying to point across. Fourth one, this one is interesting. Huh? It says it asks, in which of the following methods of pricing costs lag behind the current economic values? Okay, so let's say currently the price of a material is 10. Now, in which of the methods you will be pricing it, it is lagging behind. So it will be 9, 8, or 7, or 6, or whatever. Now, the first option that you have is last in, first out. Now, if it is LIFO, the last in came in at 10. So, is it lagging behind the current value? No. So, this is not happening. In FIFO, the first that came in will be the first to go out. Now, the first that came in could be at a lower purchase price, and it may not really reflect the current economic value or current price of that particular product. Which means what? First in, first out is the method where the price is lagging behind the current market price. But although we've got our answer, we'll still look at the other two. Replacement price. Now, what exactly is replacement price? So, replacement price stands for if you had to buy a new set of material right now and replace it. So, let's say you have 10 units right now with you. You are going to consume these 10 units. So, you'll have to replace it. So what you are going to replace it with at what price becomes the replacement price. To a large extent, it is very, very close to the current market price. See, because if you have to replace the material, you'll have to buy them new and then replace it. And buying them new would mean it is as good as the current market price. Okay, so that is what is replacement price. But again, it will not lag behind. And then comes in the weighted average price. So what happens under weighted averages, it will smooth it out. Okay, so it will smooth out the prices, so you may not have uh, a lot of lag, it may have some lag but not as much as FIFO. Okay, then Let's look at the next one. Continuous stock taking is a part of annual stock taking, perpetual taking, ABC analysis, and bin cards. So, continuous stock taking is basically where you're trying to control the inventory by having a periodic check every time on a regular basis, so that you are matching what the book says versus what you actually have. That is what happens under continuous stock taking. Okay, now that does not happen in annual stock taking. Under annual stock taking, you take your physical count of stock only once. Okay, under ABC analysis, you technically do not take stocks. Under bin card, now what is a bin card? It is a method of physical stock taking. What happens under a bin card is, let's say this is a bin. I have 100 screws over here. I will attach a card to it, which is actually the bin card, where I will say that right now the bin has 100 units. Now if a worker comes in and removes 10 units out of it, so he will write minus 10, and now you're left with 90. Okay, like that it will keep on reducing. Now here the storekeeper or the store manager, he comes in and puts in 200 more units, so he will put down plus 200. So whenever you remove something from the bin card or add something to the to the bin, you will make an entry in the bin card saying what is put and what is not put. Okay, so like that it helps you maintain the stock. But again, it could be considered part of bin card as well, but that is a physical stock taking method. Continuous stock taking is in line with your books. Okay, now sixth one, it says, in which of the following methods issues of material are priced at a predetermined rate? Now let's just hypothetically say you know nothing about it and you're now going to take a punt. Okay, inflated price method, will that be at a predetermined price? Why? No, it cannot be, because an inflated price will have to have some inflation coming in, and only then you will be able to charge it, right? Replacement price method, will it be predetermined? No, because replacement price will tell you the current market price. You cannot predetermine that. Market price method, no. So what are you left with? Standard price method, which means what? One price for everything. Okay, all the materials will be charged at that one price, and that is what you're going to charge. So that will become the answer to this one. So many a times you may come across such MCQs which I've not heard before at all, and which is possible. Be a little ready for that, and it is okay if you don't know at all. You will have to start the process of elimination, at least ruling out the obvious ones which are not there, and then figure out what is the best bet to take. Okay, then the next one, when market prices fluctuate widely, the method of pricing that gives absurd results. Okay, absurd results. Now let's say I got a unit today at 1 rupee, then I got at 10 rupee. Okay, now my simple average will say 1 plus 10 divided by 2. It will put me at a simple average of 5.5. But what does a weighted average do? Weighted average will say you got 1 unit, 1 rupee. Let's say you got 2 units over here, and here you got 10 rupees for 1 unit, and it will average it out. So, what gives you absurd prices are simple average and not weighted average. Weighted average will give you a smoother price. Are we understanding? And which is actually the next one. Uh, it says. Uh, When prices fluctuate widely, the method that will smooth out the effect of fluctuation is weighted average. Okay. Then comes in question number 9. What does it say? Under the FSN system of inventory control. Now, what is FSN system of inventory control? The FSN stands for fast moving, slow moving, and non moving. So we classify the materials as to whatever is fast moving, we keep them very close to the delivery area. Slow moving will keep them a little behind, non moving will keep them away from the delivery area. Okay. Now they are saying in this method, how do you do the classification? Is the classification based on value of material consumption? No, it is not about the value. Frequency of usage of items. See, fast moving, slow moving, non moving. It suggests the frequency of the items. Criticality of the items of the inventory. It doesn't really matter whether it is critical or not. Or value of items of inventory again. So values and volumes are not really part over here. Okay. And the last one, form used for making a formal request to the purchasing department to purchase materials is a material transfer note, purchase requisition note, bill of materials, and material requisition note. Now, what is the form asking for? It is for the purchasing department to purchase materials. So, who are you then? You are the stores department who is requesting the purchasing department to buy materials. So now, material transfer note, are you transferring materials between two? No. Bill of materials. Now understand what is bill of material. It is like a ingredient list for a recipe. The ingredient list tells you if you want to make this recipe, what are the things that you'll need and what are the quantities you'll need it in. So that is again not. Then you have material requisition note. Now who gives a material requisition note is basically the production department will send it out to the stores department. So I am stores, you are the purchasing department. Who am I servicing to? I get the materials from you and I give it to the production department. So when the production department asks material from me, I give they will send me an MRN, material requisition note. They are asking for material. When I will ask material from you, I will ask you for a purchase requisition note, a PRN. Are we understanding? So that's it for this one. Let's start the next one. The next topic, employee costs or labor as we call it. There are 12 MCQs. I think two of them are number based. So we'll do those, but I'm more focused on the theory MCQs. Let's begin quickly. The first one is idle time is the time under which full wages are paid to workers. No productivity is given by workers. Both A and B, and the D part is none of the above. Tell me, what do you think? What would this be? Do they get paid for the workers? Do they get paid? Yes. Are they working? No. So it is both A and B. Okay. Then the second one, cost of idle time due to non-availability of materials. Non-availability of material meaning this idle time could have been avoided. If it could have been avoided, then this is your abnormal idle time. Abnormal idle time, is it charged to overhead? No. To the job? No. It is charged to costing P&L account. Okay. So that is what you have for the second one. Uh, Time and motion study. Now, this is a very interesting study. What exactly happens under time and motion study is these engineers actually monitor as to how much time is taken by a worker, how much do they have to move, are they moving a lot, can they reduce their motion, can they be sedentary and still be doing the same thing with same efficiency. So that is all what they try to calculate over there. Now, this study is conducted by the timekeeping department. Now, who's the timekeeping department? The one who records your attendance. Time in and time out is the timekeeping department. Personnel department is the one who is hiring you. Okay. Payroll department is the one who's paying you. Engineering department. Yes. The answer is engineering department. They're the ones who look after all of this. Then the fourth one, identify which one of the following does not account for increasing labor productivity. Does job satisfaction increase productivity? Yes. Does motivating workers do? Yes. Does high labor turnover increase the labor productivity? No. Labor turnover reduces productivity. Proper supervision and control. Yeah. If they're under good control, they will. Then labor turnover is measured by number of persons replaced upon average number of employees. You already have an answer. Go on. I'm not even discussing this one. I'm sure you know all of this. Huh. The sixth one. Time booking refers to a method wherein dash of an employee is recorded. Now see, there are two things, timekeeping and time booking. Timekeeping takes care of the in and out, okay, the attendance. Time booking is basically where uh, the worker's time is booked for the hours that they work. Let's say the worker was from in the factory from 5 a.m. to 5 p.m. So he's in the factory for 12 hours. What did he do for those 12 hours? Was he roaming around? Was he doing a particular job? Was he doing multiple jobs, etc., etc., etc.? That is what is time booking. Okay, so keep that in mind. Attendance, no. Attendance is time keeping. Food expenses, no. Health status, no. The time spent on a particular job is what does time booking do. Employee cost includes wages and salaries, allowances and incentives, payment for overtime, all of the above. The answer is all of the above. If we have done this, we have done a proper question on this. If the time saved is less than 50% of the standard time or time allowed, then the wages under Rowan and Halsey premium plan on comparison. Who gives more payment? At 50%, both are at par. If you are saving less than 50%, Rowan pays more, Halsey pays less. And if your time saved is more than 50%, Halsey pays more, Rowan pays less. So here we have less than 50%. So Rowan will pay more wages to workers under Rowan than Halsey. Then standard time for a job is 60 hours, guaranteed time rate is 0.3. What is the amount of wages under the Rowan plan if job is completed in 48 hours? Do it yourself, not even trying. You are well equipped with doing that. Important factors for control of employee costs can be time and motion study. Uh, then you have control over idle time and overtime, control over employee turnover, all of the above. Now, employee cost means if you want to control labor cost, you should have time and motion studies so that they are not putting in a lot of idle time and you are efficient. Then control over idle time and overtime again, same thing. Control over employee turnover again, it will help you reduce the cost. Why? Because the moment you have idle time, employee turnover, your efficiency will decrease because the new workers who have come in do not know as well. All of the above, so that will be our answer. Out of the following methods, attendance is marked by recognizing an employee based on physical or behavioral traits. Now, under the punch card attendance system, it is very basic. There used to be a card with various holes in it. Okay, you had to just punch that hole so that your attendance gets marked. So it has nothing physical or behavioral trait in it. Then you have attendance register. Again, no physical or behavioral trait in it because you are writing down in a book. Token method. So, how did the token method work? So, you had a lot of tokens and you had a huge wall with everybody's name on it. So, if you've come to the factory, you take the token out and put it in front of your name. So, it means you're in the factory. If whatever are left across, those are the tokens which have not been put in, which means these people have not come to work. Okay. So again, it has nothing physical or behavioral. What is physical and behavioral is the biometric attendance system. Now, under the biometric system, what happens is uh, you have either the eyes or the fingerprint or something that is something related to physical trait. Are we understanding? So that. And if overtime is required for meeting urgent orders, if overtime is required for meeting urgent orders, again, we've done a question for this. Overtime premium should be charged to the respective job itself. Customer said do it on urgent basis, so we have to charge them. That's all. Yeah. So that's all on this end. Let's start with the next topic. Okay. So next chapter that we're doing are overheads. Again, some 10 or 12 chapter MCQs over here. Let's quickly have a look and see what all we have. So, uh, the first one that they've said, it says fixed overhead costs, basically fixed costs, are not affected in monetary terms during a given period by a change in output. Yeah. But this statement holds good provided. So fixed costs are supposed to remain the same, right? Uh, they do not change with the change in output. And they are saying when is this true? When the increase in output is not substantial, when the increase in output is substantial, both A and B and none of the above. See, guys, you will have to remember this. We have discussed this multiple times. Fixed cost remains fixed up to a certain range. The moment you cross that range, the fixed cost also changes, right? So it's the same thing. That relevant range, if you cross that, you will have to have a increase in fixed cost as well. So it will remain fixed only and only if the increase in output is not substantial. Are we understanding? Now, next one, dash capacity is defined as actually utilized capacity of a plant. Now, this one is interesting. What would you call the capacity which is actually utilized of a plant? It is the practical capacity. The theoretical capacity is when you're working 24 hours a day, all the days in the month, year, etc., etc. Installed is what can be done. Practical is what you can do. Normal, we have actually an MCQ on that, so we'll look at it. The allotment of whole items of cost to cost centers or cost unit. The entire cost for a particular department or a particular unit. What will that be called? Overhead absorption? No, that's the portion that everybody absorbs. Cost apportionment, cost allocation, none of the above. I'm sure you remember there are questions on distribution summary. This one is cost allocation. Those costs which are known for each and every department and are specific for each and every department, that cost is cost allocation. Uh, Primary packing cost is a part of direct material, production cost, selling overhead, and distribution overhead. Now, if you remember the cost sheet chapter, primary packing is part of parks. Parks is part of net factory cost. As in, after the net factory cost, you will have to adjust parks and get your cost of production. So, it will be part of production cost. Right? So, it's a production cost. Then, directors' remuneration and expenses form part of what? Directors' remuneration. This sounds more like cost sheet than overheads actually. But okay. So we will put it across as admin. That'll be your admin overheads. Production overheads cannot be. Ha, but if this was a production related director looking after the manufacture, then this could have been admin related to production, part of parks, and parks is part of production cost. But okay. Which of the following is not the classification of overhead based on its functionality? Functionality means the functions that an organization performs. So it could be production, it could be sales, it could be distribution, manufacture, HR, etc., etc. So you have factory overhead. So factory overhead is a function. Admin overhead is a function. Fixed overhead is a variability wala element. So whether it is fixed or not is variability. And then you have selling overhead. Selling overhead is also a function. So this one is what you will have. Bad debt is an example of very interesting. Bad debt is an example of distribution overhead, production overhead, selling overhead, and admin overhead. Now, it can't be distribution overhead because it is not about getting the product available to the customer. So that is out. It can't be production overhead because that is not a cost that you incur while producing the product. It is not a part of admin overhead either. So that's nothing to do with administration. It is going to be the selling overhead. It is a cost because you sold the product. It is related to selling. Now, the eighth one is my personal favorite. I really like this one. I think you should try this. Normal capacity of a plant refers to the difference between maximum capacity and practical capacity, practical and normal capacity, or practical capacity and estimated idle capacity as revealed by the long term sales trend and maximum and actual capacity. So normal capacity, see, you'll have to understand. You may have a practical capacity of doing 100 units, but the market is not ready to accept 100 units from you. The market is only and only uh, ready to accept, let's say, 80 units out of you. So the market is only ready to take up 80 units. That's what you'll produce, right? So that is what is called as normal capacity. So the difference between practical capacity and normal capacity is what you are not able to sell. So if you have a practical capacity of 100, you are able to sell 80. 80 becomes your normal capacity. Okay. So this is your answer. Sorry. And I don't know what I did. Wait. Now we will make a box out of it. No, still not a box. The difference between the actual factory overheads and the absorbed factory overheads will be usually at the minimum level. So actual and the absorbed will be at the minimum, provided the predetermined overhead rate it based on maximum capacity, direct labor hours, machine hours, or normal capacity. We just discussed this. Normal capacity is what you are usually being able to sell. So if you base your overheads, your predetermined rates on that, that is the best way to not have over or under absorption. See, you'll have to understand when they say difference between actual factory overhead and the absorbed factory overhead. Okay, absorb minus actual, they're looking at under or over absorption. So they're asking rather, when will the under and over absorption be the least? Okay, when the predetermined rate is based on normal capacity. Okay, because that is the time when you are very, very realistically putting down your absorption rate. And when you put it realistically down, that is the time when you will be able to achieve it. Okay, then which of the following overhead costs may not be apportioned on the basis of direct wages? Workers' holiday pay, maybe. Perquisites to a worker, definitely. ESI contribution, definitely. Managerial salaries. Now, the managerial salary has nothing to do with direct wages, I guess. So, this is going to be a pick. And that's it from this one. I will quickly see you with the next one. Next up, we have activity based costing MCQs. Very simple MCQs. One or two may be a little tricky, so we'll discuss all of them. Come on. First one, cost driver is item of production overheads. Sorry, cost driver is item of production overheads. No, is a common cost which is shared over the cost center. No, these are called as apportioned overheads. By the way, any cost relating to transport. No, so you have your obvious choice, an activity which generates cost. Okay, it is the reason why a cost changes or cost increases. In activity based costing, second one, costs are accumulated by activities. How do you accumulate the cost? The accumulated costs are called what? What are the accumulated costs called? They are called as cost pools. Okay. Cost driver, we just saw it is the reason why a cost changes. Cost object is anything for which you're trying to find a cost. Cost benefit analysis is where you're trying to see how much money is incurred and against that how much gain you get. So again, out of scope. Then third one, again, a cost driver is a force behind the overhead cost. You can say that, because when you say force, it means the reason why the cost is changing. So fairly well. Is a allocation base? Yes, the cost driver volume is an allocation base. Is a transaction that is a significant determinant of cost. It is again why the cost changes. So we will go with all of the above. Oh, nice. We have match the following kind of a thing. Which of the following is not a correct match? So you have production scheduling. The match is number of production runs. Fair. Dispatch, number of dispatch orders. Goods receiving, goods received orders. And inspection on the basis of machine hours. Now, this doesn't fit. Uh, the machine related cost could have been on the basis of machine hours, but this is a misfit. Now, question number 5. Transactions undertaken by the support department personnel are the appropriate cost drivers. Find the one which is not appropriate. So you have to find one cost driver which is not appropriate. Let's see. The number of purchases, supplies, and customer orders drives the cost associated with new material inventory, purchase, work in progress, supplies, and finished inventory, customer orders. So I think this fits well. Uh, the other one is number of production runs undertaken. Production runs drives production scheduling, inspection, and material handling. Correct. The quality of the raw material issued drives the cost of receiving department cost. Now, this one is not correct. Why? I'll tell you. Because it is not the quality of raw materials. It has to be the quantity of raw materials which will drive the receiving department cost. I think this one is a fit for us. Uh, the number of packing orders drives the packing cost. Fair. Then comes in the next one, sixth one. Steps in ABC include identifying of activities and their respective costs. So activity, their cost is activity cost pool, identifying of cost driver of each activity, and computation of an cost of an allocation rate per activity, which is the cost driver rate. Allocation of overhead cost to products and services based on the activities involved. So steps will include all of it. Which of the following is not a benefit of ABC? So accurate cost allocation definitely is. Improved decision making, see, these are connected. If you have been able to accurately put down the cost, you will be able to have better decision making. Better control on activity and costs. Yes. Reduction of prime cost. Now, this is the odd one out. I'll tell you why. Because there cannot be any there is absolutely no touch base of activity based costing to prime cost. See, the prime cost is made up of only and only the direct material, direct labor, direct expenses, and activity based costing is done for overheads. Now, since it's done for overheads, there is no reason for the cost to touch upon the prime cost, so it will not be able to have any impact on the prime cost. Then the steps involved for installation of an ABC in a manufacturing company include the following, except borrowing fund. Uh, okay, this sounds a little odd. Why would you borrow funds for it? I mean, it's an internal drive. Feasibility study, very important. You do a feasibility study to understand whether an organization like you would you want to do firstly activity based costing. Do you have the capability of doing it, and do you have the need of doing it? So feasibility study, yes. Building up necessary infrastructure, IT infrastructure, and training of line employees makes sense. Strategy and value chain analysis. So value chain analysis in general means to figure out, uh, is the increased cost giving you increased value or not, in a nutshell. Okay. So for me, all the three fits: B, C, and D. A doesn't fit, so I'm going to list out A. Okay, because borrowing fund, technically you don't have to take money from outside to set up an activity-based costing system. It doesn't work that way. The ninth one: which of the following statements are true? Activity-based management involves activity analysis and performance measurement. True. And activity-based costing serves as a major source of information in EBM. This is also true. So I'm going to go with true and true, which is B. And the key elements of activity-based budgeting are type of activity to be performed, quantity, cost of activity, all of the above. This one was fairly simple, yeah. All of the above. So yeah, that's it. And now I am going to take up the last topic, which is cost sheet. That will finish all your MCQs out of module 1. And then I'll do module 2 as a separate video. Okay. Okay, so the next one, next chapter is cost sheet. This is going to be really, really quick because cost sheet MCQs are something which you are very much used to doing. So there is nothing very fancy about it. Okay. Now, what does it say? Generally, for the purpose of cost sheet preparation, costs are classified on the basis of function, variability, relevance, nature. Now, the correct answer is function. I'm sure you remember that we always used to say that this is the functional classification of the cost sheet. Variability would be where we divide it under fixed variable, semi-variable. We don't do that. Relevance is whether a cost is relevant or irrelevant. Again, we don't do that. And nature is again something that we do not do. We make a cost sheet on the basis of function. So it will be admin, selling, and distribution. That is a function. Then, which of the following does not form part of prime cost? Cost of packing. This is not part of prime cost. Please remember parks P. Cost of transportation paid to bring materials to factory. Carriage inward. So part of DMC. GST paid on raw materials input credit cannot be claimed. Again part of DMC. Overtime premium paid to workers part of DL. So other three part of prime cost. The first one is not. A Limited received an order for which it has purchased a special frame for manufacturing. It will be considered part of what? Is it direct material? The answer is no, because it is not being consumed in the manufacturing process. Is it direct expense? Yes, because it is directly related to the order, which is why direct expense. Is it factory overheads? No. And admin overheads? Definitely no. Salary paid to plant supervisor. Where is the plant? Factory. What is the, where will it be then? Factory overhead. Salary paid to plant supervisor, factory overhead. Depreciation on director's laptop is treated as what? So director's laptop, director is administration, director's laptops depreciation will also be administration. A manufacturer has set up a lab for testing its products for compliance with standards. Salary of the lab staff will be part of what? Now, this is quality control. This is part of parks. This will be a quality control cost. Audit fees paid to auditors, very, very similar. Audit fees paid to auditors is administration. Salary paid to factory store staff. Factory store, stores department staff. The stores is in the factory, so this will be part of factory overheads. Canteen expense for factory workers, part of factory overhead, because it is for the factory workers. Had it not been for factory workers, then we would have to think something different, but it is part of factory overhead. Company pays royalty to state government on the basis of production. So it is royalty. Royalty is part of direct expense. C. Wow, this happened really quick. Yeah? Just 3.5 minutes. Very nice. Chalo. Okay. So the last topic out of sorry. So the last topic out of module one, it is non-integrated accounting. Let's have a quick run through. So what does it say? Under the non-integrated system, same ledger is maintained for cost and financial accounts. No. Non-integrated is separate books, integrated is same book. Uh, Here we have our answer. Separate ledgers are maintained for cost and financial accounts. A and B cannot be both forever at all, and none cannot be again the case. Notional cost. Now, this is interesting. Notional cost may be included in integrated accounts. No. Why? Because integrated accounts include cost and financial books both. Financial books do not let you allow the notional cost. You cannot record the notional cost in your financial books. So that's how to. It may be included in non-integrated accounts. Yes, because under non-integrated accounts, your cost books are different, financial books are different, and in the cost books, you are allowed to record notional costs. Notional costs cannot be integrated in cannot be included. No, that is not the case. None of the above. No, the right one is the second one because it may be included in your non-integrated accounts because it includes the cost books and under cost books you have both. Then the third one under non-integrated accounting system, the account made to complete double entry. So where do you post your second effect is what they're asking. We know that here. The second effect is posted in GL account, general ledger adjustment or cost ledger control account. We have the GLA with us. Integrated systems of accounts are maintained in separate books of accounts for cost and financial purposes. No, in same books. Integrated is same books. So we have the fourth one done, same books. Fifth one, it says under the non-integrated system of accounting, purchase of raw material is debited to which account? So if you are purchasing raw materials, that is our first entry in the list of entries. Huh? The entry is stores to GLA. So we'll have to debit the stores account. So here we have the stores or the material account. So yeah. Then under the non-integrated accounts, if materials worth 1500 are purchased for a special job, then which account will be debited? Now, this we did not have any question per se, which is why we never had a question. We never wrote it in any of the books. But if it is a non-integrated accounting and if you are buying material for a special purpose, then it is directly charged to the job. It is not routed by a material or the stores account. It is directly put into the job. And the job account is basically your WIP account or the production account, which is your WIP account. So here the correct entry should be special job account. It will not be in the material controller. Keep this in mind. The seventh one, which account is to be debited if materials worth 500 are returned to vendor? So it is a purchase return. The entry for purchase is stores to GLA. The entry for purchase return will be GLA to stores. So what account is to be debited? The account to be debited is GLA, which is CLCA, also cost ledger control account. So this account is what will be debited. Which of the following items is included in cost accounts? Notional rent. We just discussed this. Donations, these are recorded for NPOs. Transfer to general reserve, financial books entry. Rent receivable. I don't think this can be recorded anywhere. I mean, it's a revenue which is receivable. Receivable revenues are never recorded. So, I don't know. Now, further it says when costing loss is 5,600. So, profit as per cost books. Profit as per cost is 5,600. and admin overhead under absorbed being 600. Admin is under absorbed. Loss as per financial books. So if it is an under absorption, you minus. Under absorption is minus. So this will be how much? 6,200. 6,200. Which of the following items should be added to costing P&L to arrive at financial profit? So what all can be added? Oh, first one, over absorption. Over absorption is added, under absorption is reduced, over absorption is added. Interest paid on debentures. See, interest paid on debentures is put under the financial books on the debit side. So it is all the because of that the profit of the financial books has reduced. So you also minus. Same goes with income tax paid as well. It is debit in the financial books. It reduces the profit. So you reduce. All of the above not possible. So the correct one is over absorption. Very good. This completes our first module. I'm sure it is helpful to you. If there's anything, let me know. You can message me on Instagram. But for now, I will see you soon.